Hello, everybody. Welcome, lifers. God bless you all. Happy New Year. Thanks for joining. If we haven't met, I am Master Friend. I have been appointed a tutor slash mentor in the crypto lifer community. And I'm just here to help you guys out, push some buttons, maybe the right ones, hopefully not the wrong ones. You know, it's just reflecting along the year. It's just been such a wild ride. And 2025 is going to be a really big year for the lot of you. If you're new to trading in crypto, it's going to be a little sketchy. And don't be too discouraged, but when you come into in the brink of a bull run, it can mislead you. In my opinion, it's best to learn in a bear cycle so you're not caught off guard. So yeah, nice to meet you guys. Um, so basically, this is just going to be an extended lecture to my free mentorship playlist on YouTube. And it's for all of you guys. And we will go over the money printer model. We'll go over my trading plan for 2025 and some back testing and some expectations of yourself. Is there a limit? I don't think so. I paid for the upgraded version, so should be good. So we'll start with the tough love first. And if I catch a cough in the middle of this, forgive me. My son brought a cold in the house and we're all infected. So I'll have to try my best to get to the mute button in time. And if I'm muted for any longer than like 5 seconds, start blasting off the chat because I shouldn't be muted from here on out. So, look, we all come in here to trade for money. That's why we all showed up here. We all want to make money. We all want to live the crypto dream where we're living free, doing whatever we want. It's Tuesday and I'm still sitting in my pajamas and I don't have to ask my boss for a day off. It's the dream that every trader aspires to have. The the thing about it is like the statistics are not on your side. And that's the reality. If 90% plus people who call themselves traders pack it in the first 3 to 6 months after blowing out, your odds are not on your side. So you're going to have to be just a little bit more strategic, just a quintillionth more smarter than price action itself, which isn't hard. It's pretty stupid. But you need to slow it down. You can't be doing what you're doing. I'm going to show you why what you're doing is completely backwards and wrong. And I hope and I pray that something bugs you in this presentation enough to want to completely do a 180 in your trading career. Now, this is for my break even and overall losing traders. If you're profitable, don't let me bug you out. Okay? Don't listen to me. Don't listen to Sam. Don't listen to the elite. Don't change your indicators. Do not change what you're doing if you're profitable, and you'll stay profitable. The problem is we as creatures, we want to be fulfilled, and we got these dopamine rushes. And eventually you're going to realize that you've been trading dopamine this entire time. You haven't even been trading the charts. You've been counter trading yourself to Brokesville. There's something creepy going on in these charts if you haven't realized it yet. Price will typically stop you out just to go your direction. or make a pattern and just completely walk on you. And it happens a lot. Now, I know that showing you where the market is likely going to go next and price hitting those points is really cool and it looks really trippy and you all want to know how I'm doing it. I just hunt liquidity. That's it. What's even more impressive to me than a big fat win and knowing where the market is likely going to go is how well you control your losses. How good are you at losing? The reality is, you're a losing trader. As soon as you enter a trade, it's a loss. You're eating fees, you're seeing slippage. If you're in Forex, you got spread. But guess what? You have to dig yourself out of that loss. So big fat wins are fine and they're good and all, and they're kind of impressive when you're a beginner, but that doesn't impress me anymore. I want to see how well you're able to manage your money. That's impressive. None of that is going to go viral. I've made public videos where I'm taking losses and shutting it down. Not impressive. People be like, this guy sucks. Good. I'm glad people think that because those people are bankrupt. They have no idea what they're doing. They don't know how to take a loss. And once you take a loss, especially for the men in here, you see it as an absolute act of horror. Like somebody, like your best friend had just taken your girlfriend to Mexico. Every time you take a loss and you feel, that's the market inducing emotions into you. It's natural for you to want to react and have these reactions. But this is the hard part in trading. How to counteract your human instincts. This is why you're finding it so difficult because you're running on instincts. You think because the candle is red in a 1 minute time frame that it's over. And if you've been hanging out with me for a couple of weeks and you were short, prices pumped in your face aggressively and violently. And there's a reason for it. It's because the market tricked you. It's really good at doing that. So you just got to have this a little bit more of an edge than what you got going on right now. And look, you're not going to do this. The lot of you are not going to do this. But you need to stop trading your live money. And if you don't, I promise you, master friend guarantee, you will lose all your money. And then you'll put in more money and you'll lose that too. Remember, 90% of traders are losing. They suck. And that goes for 90% of these people you see on social media. They suck. And I counter trade them all day. I look for them. I seek them. They are the most beautiful sentiment to me because when they start flipping bearish, I'm looking for a bullish setup. 95% of the time, I'm right. Think about it. 90% of traders plus are losing. That means they're losing 95% of the time. If you were to counter trade everything that you've been doing emotionally, you'd be a big fat winner. So I'm going to teach you how to counter trade what you're doing. Again, these things that I'm going to teach you, you have to practice in a demo setting. And if you've told yourself that you need live funds for the real experience, well, for those of you that lost a bunch of money with that mindset, how's that working out for you? Not too good on your mental capital, is it? Because you can have $1 million account, but if you have no mental capital or no strategy, you don't have an account. You're not even trading. You're just literally walking down the street, throwing money behind you. That's all you're doing. That's it. Now, if you can't If you can't muster up enough courage to put your ego in the corner and pop yourself into a demo account, just use a couple bucks in your trades. Literally 100% of the students that went to demo and went to very ridiculously small amounts of money in their trades, they were happy. They were learning. They developed a skill. They settled into a trading plan while they refined it. And now they're taking money hand over fist. They can walk into these charts any day of the week and take as much money out as much whenever. This model that I'm going to teach you guys repeats at the same time every day. And it does not stop. Now, sometimes it's an absolute butt face. Oftentimes, it doesn't give a proper entry technique. When it's perfect, it freaks out of control. Okay. It's not my, I don't want to encourage you to trade every day because as a day trader, there's some fine-tuned rules to settling in to what you're doing. And the first rule is day trading does not mean everyday trading. Now, some of you guys that are taking high frequency trades, 30, 50 plus a day, you can trade 99% less and make 1,000x more. And I know it sounds counterintuitive. I get it. But let's just run on the theme that the charts are literally everything opposite to what we have learned in life. For example, if you're in construction, if you are into aesthetics, right, and you run your own business, you got to pump out square footage. If you have a restaurant, you need to flip tables. You need high frequency to make money. Not in trading. It's the exact opposite. I can take one trade, which I did the other day. I turtle soup longed and I'm upset. I was up 7 grand today. While everybody was trying to catch every single short they possibly could. And they're making $100 here, $100 there. Oh, it dipped a little bit here. I don't know where it's going to dip to, so I'm going to panic close instead of just buying the dip in an uptrend like a good little trader. It's not our job to catch every fluctuation in price action. What we as traders are looking for is something very, very specific. You're going to need to be a one-trick pony for a little bit while you get comfortable with your new tools and just the charts in general, especially if you're new. I know I can feel it. Some of you guys are like, shut up, just get in the charts. This right here, this is the important stuff. What I'm telling you right here. This is the foundations of you as a trader. And your own personalized little learning curve is going to be unique to you. So it's very important that you're not comparing yourself to your fellow students, me, anybody else on social media, because I guarantee if you show me somebody on social media, I will tell you immediately if they suck or not. And if you compare yourselves to them, you just set yourself up for failure because you have given these people that have proven absolutely nothing in a live setting credit. You've given them credibility. And now you're going to start adjusting you as a person and a trader in accordance to what they got going on. And they haven't shown you squat. And if you kept score, you would laugh at them and you'd be like, wow, I'm actually better than you. I counter traded BitBoy. Before I met Sam, I counter traded BitBoy and all the 100K dorks. And I took the bear flag, this one here. This is my first live trade ever while everybody was calling for 100K. And it's documented on Twitter. All right. First trade, bam. And I demo traded this whole thing. I didn't realize that there was cycles, but that was painful. My first trade right here, just a bear flag in the daily time frame. And it bucked. Retested the 200, was perfect, and it slapped right to the discount. It was great. But once you start keeping score, you're going to come to the realization that you're way better than you thought you were. Start keeping score. There is about 5, maybe outside of this group, people on social media who actually know how to trade and live trade, they're not teaching. They barely know what they're doing to be able to teach. And I'm not saying this to be rude, it's just a fact. I really want to drive home to my beginner friends in here to hop into a demo account and practice. You don't need live funds for the real experience because here's how it works. You get set up with a model and a plan, and then you understand risk management. If you don't understand risk management, you have no business putting any dollar behind a trade. Not one, not 50 cents, nothing. Risk management is the basic foundations to any trading plan, every trading plan. If you don't have risk management, you are a failing trader. And that's not to belittle anybody. It's, again, it's a fact. Now, before crypto, you used to have to go set up with a broker, right? You used to have to go KYC, go put a bunch of money into a broker, and it was the setup to go and trade was a pain in the arse. So not a lot of plebs and normal people did it, right? But then you had crypto come out and centralized exchanges with no KYC and 500x leverage. Full port, let's go, right? You got no direction. You just started making up and legit making up ideas about what you felt the market was about based on your own analysis and logic. It's not working out very good, is it? I'm going to show you some things and you're going to bug out. And I pray that you just practice this in a demo setting because you learn your skills in a demo and then you learn yourself in a live account. Now, what do I mean by that? When you've got no emotional attachment to monetary value in your trade, you don't care. You simply don't care. And for those of you that have been in a demo and you're demo ballers by nature, you know exactly what I'm talking about. You're patient, you're waiting for your model, you're you're applying risk management correctly, you're doing everything correctly. You're like, "Yes, I'm a good boy, girl. I'm great. My account's up over a bit. Let's go to a live account." Wrecked. Wrecked immediately. And you're like, "What just happened? Why did that just kill?" Look, you're going to lose money. It doesn't matter if you practice in a demo first or not. You're going to lose money. Now, what all you got to do is run damage control. You know you're going to lose money because you have no experience. You have no actual real experience in the markets. And maybe you do. And maybe you're not a losing trader, then I'm not talking to you. But specifically for my people in here that are struggling and you're going, "What am I doing wrong?" Well, you're putting money behind a trade and you don't know what you are doing. I don't, I cannot make that any more simple. And, I got this one student, I had to kind of make fun of him and be a little hard on him behind the scenes. And now he's finally profitable. He's finally getting paid out. But I had to, he's a different, some of you guys just learn different, right? So I'm all love in a public setting, but when I see you screwing up, J-Soul, I'm gonna tell you, and I'm not gonna sugarcoat it. I'm not gonna gaslight you and tell you, "Oh yeah, you're doing great. You'll do great. Trust me, bro. Just keep plugging your money into my what do you call it? Affiliate links." I don't push affiliate links. You guys, I don't do it. Sammy runs a business. He does it if you're into Bookmap and things that he uses, but he's not pushing Bybit affiliate links. You know what I mean? Like these other scammers on YouTube. Big difference. So, excuse me. So learning yourself is inevitable. You're going to have to learn what type of person you are under the pressure. Am I too impulsive when I take a loss? Am I too impatient to wait for my technique to unfold? Do I front run it? Is it too late? When I'm in profits, am I smelly? You know, am I shaking? Is my heart beating? Do I not know when to take profits? Do I even remember technical analysis? You could be up like thousands of dollars. Finally, you hit the model. It's up. You risk 2% on this trade. You're up, you're up 14. I was up 14R on that trade so far today. I was $500 and just crazy, right? And you're just like, you don't know what to do. And then your significant other or your animal comes in and you're just like, get the heck away from me. Don't you understand? I'm trading here. This is so hard. And you just snap. That's the stuff that you're going to learn about you as a trader. And you do not, I'm telling you, you don't want to do both things at once. Learn yourself as a trader and learn your technique. You will stunt your learning curve so hard by doing that. You want to fast track yourself to figuring out the markets demo. You want to fast track yourself to what could be massive, massive financial growth, life, family tree history changing financial abilities. You're going to be in a demo. You're going to be journaling. You're going to have a pen and a booklet, several. I have 5 sitting on my desk that I use simultaneously. A couple are to keep track of you guys, and 3 are for me. I just got this ball and new pen for Christmas too. It's making me want to write. You do that, you will fast track yourself to understanding what you're doing. Because right now you're not trading. You're not a trader. You're not even doing anything that is trading. You're letting these candlesticks move and you're letting them punk you. So that's the tough love. Now, here's some encouragement. Don't give up. This stuff is so easy, you guys, and I know I'm not allowed to say that, but I'm going to say it. This gets so easy. It's like taking candy from a baby. That's why you see that guy robbing the cell phone store with the box on his head. Like, look at Sam. The guy's just taking money hand over fist now. And if you've been here he didn't leverage trade 2 years ago. He didn't live trade 2 years ago. Now he's killing it. Okay. The guy's savage. And it just took a couple of little tweaks and all of a sudden you can't stop him. Right. And I pray this for you. I want this for you. I probably want it for you more than you want it for you because I see the potential that you could reach sitting where I'm sitting. I see what you could accomplish. When I got students in the Discord not paying attention when I'm putting levels on charts, you're missing the boat. And it's not an egotistical thing. I know what I'm doing, obviously. And I'm trying to help you. I'm not trying to say what you're doing is wrong. If you have a system and you're making money, I do not want to screw with that. I want to actually encourage what you're doing and see if there's any way that I can help refine what you're doing just with these turbocharged time skills. But you see it and you've been seeing it. It's been a thing to counter trade me the last couple of weeks and it's not worked out very well for those people. Some of them, yeah, you can look. And again, it's not an egotistical thing because you can be offside and still profitable. Take my trade from NASDAQ this morning. Those of you that didn't see it, I turtle souped this long right here on the 786, right up there. And I was offside in direction and still profitable. I actually took one on the live this morning and I took another one with my private students. And Yeah, it was offside in direction and it was still profitable. So you can be offside and still profitable. Sam can be long and I can still find a scalp short. Lex can be short and find a scalp short in my overall long. That's fine. But I'm just, when I'm in the Discord with you guys and I'm not, just talking ish, like pay attention because I'm trying to show you something that repeats. It's a phenomenon that repeats in the markets. Spoiler alert, I don't believe the markets are random, and you're not going to convince me. Okay? Yeah, they're rigged. Good news, everybody. The markets are rigged, and I'm going to show you how they're rigged. Now, there's no magic in the fib tool. Okay? It's just a measuring stick. It's like a Stanley Fat Max measuring tape. That's all it is. And we're measuring human greed and fear. Okay? That right there, you could tell me that was random, and I'm not going to believe you. Okay? You can tell me that I predicted the entire world's buying pressure all at once miles ago, every day, every week, and again, you're not going to convince me. So what this is our range. And this is premium and discount. So everything above the midway point is a premium market. Everything below the midway point is a discount market. When TradingView has a sale, because it's like over $1,000 a month or a year for this thing, right? When TradingView has a 70% off sale, who's running in? Me, you, everybody else who wants a premium TradingView for a massive discount price. Well, we've got a 77% off Bitcoin here and discount. Underneath the 50 discount. Now, as a retail minded trader, you will see this as selling pressure. You will be convinced, like Crypto Capo, that 10K is and $3,000 I seen was on the table. Okay. It ain't, and it ain't going to lose that low. It didn't lose the 786 here. It didn't lose it here. It didn't lose it here. And it didn't lose it there. That one right there, if you can see it. That one right there. That's a 786 retracement. Tell me it's random. I'm not going to believe you. Okay, so what I'm doing here is I'm counter trading everybody that uses buying and selling pressure logic. This is the power to what I'm doing. So when I'm in a discounted market, I'm looking for longs. I'm waiting for divergence. I'm looking for a reversal model. I'm looking for my model, my money printer model, and it's right in here. It's actually right in here on the 4 hour, but it leaked into the daily, and that 618 there was the bottom, the higher low of that trend shift here. Okay, but don't worry about that. Premium and discount. This is all I'm doing. I'm hunting people's stop losses. That's all I'm doing. So BitBoy, 100K, right? Boom. Boom. Everybody stops. They're down here. Right in here. This is stop loss city right down here. Now this is what I think the markets are, is a slaughterhouse. And they're only coming after your money. That's all they want. This is why you feel like they're after you specifically. This is why you get into a trade and it turns on a dime immediately. Toad. You guys helped me invent that model. It was pretty cool. It's when a really emotional new trader will start screaming, it's dumping in the 1 minute time frame. And then as soon as they press enter, price turns on a dime. Toad. It's hilarious. I told you. Self trippy. So Sam, bottom call here, flawless. That bottom call has been in profit every day ever since. My bottom call was here. I was looking for the higher low. He had a little bit more cojones on that one. So shout out to Sammy. So this is what I'm doing, guys. I'm looking for premium and discount, and I'm also blending time. The 4 year cycle repeats every 4 years. It's not going to change. When you go and do your back testing, you go, okay, how many times did this win or this lose? Well, the 4 year cycle is 100%. So if you think it's going to change this cycle, you likely have like, I don't know, something wrong going on in your brain. But that's totally a beginner thing to do is to go, okay, well, my model repeats 80% of the time with a 1-to-1 R, high strike rate, bang, bang, bang. But I'm going to counter trade it this time. How many times have you done that? So many. So don't do it this time. Okay. These guys that are panicking because of this tiny little red here, you just keep score. Okay. So we're up in a really fat premium market right now. And I'm not going to lie. I see it both ways right now. So we'll just jump into a daily time frame and check that out. That head and shoulders looks like it's going to dump. I can't deny that. But it looks just almost strikingly similar to this one. We had equal lows and there's a big pool of liquidity down here. Now, typically for me, I'm waiting for this puppy and and I'm still butthurt over this. Okay. Cause I was waiting for this baby. Like I bet the farm it's coming down here. And then I load up and look, it didn't even hit the 618 and she was gone. So when Bitcoin gets in a really bad attitude, it doesn't come back. It doesn't do deep dips. It's done its job already, which is take people's money. That's all it's doing. Like I know, I get it. And it's going to be really hard for me to tell you otherwise. It's just after your money. That's it. You just got to learn how to ride these waves, and I'm going to show you. This bottom call here, and it wasn't just a bottom call. My private students, my leverage masters, they will tell you when price was up here and this bull flag was banging, I was looking for everybody to get stopped out before that. Okay. It's literally, I don't know how to make it any more simple. I've been begging you all at exhaustion to learn how to buy dips with me because we're in a bull cycle. And then you have everybody, I think, I feel, I believe, I'm panicking. We're in a bull run, guys. So buy dips. So not only when we were up in this bull flag did I have this for a target, this was my bottom call for a trend continuation. And that bottom call, again, has been in profit every day since. Now, I'm going to show you guys some things, and it's my hopes to get you really excited for your future in 2025. Again, you can tell me that's random, but if you think that I'm calling the entire world's buying and selling pressure within pennies, you must think I'm really cool. Within this little bit of information, I want you to be able to trust your setups. From here on forward, moving into 2025, I want you to trust your setups. Because if you think this Bitcoin's random, this does not apply to altcoins. If you think Bitcoin's random, you've just demolished any trust that you're ever going to have in any setup. And if you've got, engraved trust issues from childhood, you're going to find it really difficult to overcome yourself unless you practice and you come to the realization that, oh, maybe they are rigged. Maybe there is something trippy going on in here. Buy red. Buy red candles. Okay. So we're going to go over some basics of trend, and you're going to understand very quickly why I don't use indicators and why I don't need them. This is our accumulation range, or as we call it, the idiot box, because this is where everybody's getting trashed. I invite these, I welcome them, because without them, you wouldn't generate sentiment. What is sentiment? Sentiment is where you have traders that know everything about everything. Okay, they went to university, they've got 20 years, blah, blah, blah. They know everything, so you can't teach them anything. So you have half of traders going, okay, well, we're long. And then you have the other half of traders going, well, I'm short. Well, who was right? Likely nobody. So what I'm looking for is a nice scoop down. Well, let's just say that price came from down, okay? And price then continues down. This is where I start getting excited. Okay, so everybody will see this as a trust me, bro, SR flip. It'll dig down deep into a pool of liquidity, likely a 786. And then it'll do this trippy thing where it'll shift trend. So a trend shift is it gets easier over time to spot them, but you've got a series of lower highs intact. So this would be your swing high here. This would be your swing high up here. So you've got a downtrend, obviously, right? Lower high, lower low, lower high, lower low, lower high, 786 assumed here. You see this higher high here, how it gets blasted by this impulse here? This is the FOMO impulse. This is the impulse where you're going to feel like you're missing out, and it's going to be violent and to the point, and you're going to be like, oh my gosh, I need to get long right now. And I'm telling you, be patient, be more patient, more patient, more, even more than that, and wait for that. This right here is my money printer model. And you're going to find that this thing bangs between 7 and 11 every day. Okay, sometimes it's like noon, sure. Sometimes if it's being rude, but by 11, I'm not interested, okay? If price isn't freaking out by like 10:15 a.m., like when Sam gets on the live, if price is not moving, I'm typically not interested at all. But yeah, this is the basics and a crude depiction of my money printer model. So you got to understand trend. And then you have to understand when your trend is shifting. Okay, this is the spooky one right here. When you look left, you have to make sure that you were in a pool of liquidity. So let's just say, for example, that there was, excuse me, stop losses below the market here, and we dug into them. And once you dig into them, you need this snapshot up. Okay, now you're not worried about selling pressure. You're in a discount market. How do you know? Because you just pulled from this high here to this low here, and you're underneath the 50 line. So you're in a discount. So you're looking for reversal with divergence in a discount. And this is how I'm counter trading all of everybody and winning with a high strike rate, very high. Like the trade you see me turtle soup this morning, posted it in the Discord. And sure, I lost my first one. So what? We all lose trades, not a big deal. But I don't blow out and I don't revenge trade. I sit there and I wait patiently for the next opportunity, which is where you guys are blowing it. And hopefully this will help you. Okay. Running a time-based chart and understanding that timing is everything will really not only help you in your trading career, but it will provide you a level of cozy that when it finally hits you, that you never thought existed. That's right. You don't have to be in your charts for 18 hours a day. My trades last like 10 seconds to maybe 2 hours day trading. Okay, I'm not talking about the one shot, one kill weekly range. I'm talking about my day trades. They last like, they're quick. Like by Sam's live, I'm pretty much done trading for the day, sometimes the week, like today. So this puppy here, just looking at it is so beautiful. So within here, you're going to find something very beautiful. Okay, it's an inverted head and shoulder. It's an ascending triangle often. It is a cup and handle. It's all sorts of things. It's all there. But when people are so hooked on selling pressure, they'll do this, and then they'll do this, and they'll go, that's continuation because selling pressure, trust me, bro. And then it snaps in their face like 90% of the time. And sure, yeah, bear flags are great, but I'll teach you when to play them. And it's not in a discount. So this accumulation range here, once you take the pool of liquidity from everybody going long here, this is where you're looking for a long down in here. And typically you could just take it to these stop losses here. Now, why is that important? I don't know if you guys, a lot of you haven't figured this out yet, but you're in the markets and you can't buy if nobody's selling. And you can't sell if nobody's buying. So this is called handshaking. This is the technical term in the banker world. And nobody's supposed to have this. And this is for you. I am buying off these losers here. And then I'm selling to these losers here. These guys, this is the sentiment generator. It's bullish. It's bearish. You're both wrong. Okay. Let it get rated. Look for your reversal. You're buying the stop losses. Let's say that there was a double bottom down here to the left, right? Or even up a bit. Let's say that to the left, way back there was a double bottom. And then it made this accumulation range above the double bottom, wiped everybody out because of trust me, bro support, right? Boom. And then it reverses and goes your direction. Now, everybody's so hooked on selling pressure that they're missing the reversal. They're missing the next bull flag because it has to be whatever they think it is, and that they won't let it go. So these longs, if you're in a long position, you have to sell it to close the position. So you have a sell stop. If you're in a short position, you have to buy it to cover. So you have a buy stop. So I'm buying off the sell stops and selling to the buy stops. This is all I do. I don't do anything else. There's nothing else for me to do. And I teach you guys this at exhaustion. So when you guys see me catch the absolute bottom, like you did on Bitcoin a couple nights ago, that's turtle soup. And then you've seen Bitcoin snap up and then retrace like this, and now we're up in here. Does this not look exactly like what's going on in Bitcoin right now? Accumulation here. That's your idiot box. Snaps down. Does it take liquidity? Double bottom here. Oh, no. Oh, yeah. Oh, yeah, baby. It's going to get way better. Then this snapshot up here that made everybody FOMO. Everybody was FOMOing. They were like, please, please, bull flag, break out for me, please. But no, it didn't. It was going to come and rob you first, coming back down to my original entry, and then right up to violence. I had this on my chart all week last week. And again, if you're trying to short a bull run, you're backwards. You're doing it backwards. You're listening to new people who pretend that they got years in trading. Yeah. Once you hit a certain degree, you can see what you could see. You know what I mean? I don't want to talk bad about anybody, and I don't want to get anybody, any ill will or any intentions, because like it's my mission to try and help you refine what you're doing. Okay. And my targets were acquired. I did piece myself off here. I'm still in on my original. I had my original entry, but I had two standard lots on, and now I got one. So I took half of the position off the table. That dip there. I did see that money printer here. So stop is at, entry is down here, and I'll let her rip for the week. It's the bottom or it's not. That's how it works. So that little puppy right there. Now, imagine for a second that you had an entry right where these stop losses are. And I know what you're thinking. I can't buy red. I can't buy it as it's trading down. That's too spooky. I'm with you. It is. It's really spooky to buy that red, but you don't need to. Eventually, when you understand what I'm showing you and you get used to the ebb and flow of price action and time, you will be able to buy that easily. But my students don't gravitate towards turtle soup right away. This play here, that is your emotional FOMO snapshot. Once you've hit a pool of liquidity and you've taken sell stops out of the market, you're going to see this snapshot. And this snapshot is everything. This is everything. And I was like, somebody was asking me, blah, blah, blah. And I said, look, it's not that it has to. And it actually ended up dropping immediately after I said it. And it was just spot on gold. But I was saying, permit it to come down to here. It doesn't have to. It could totally SR flip off this candle. It almost did, actually. It went for another higher high. It was a swing failure. All right. So somebody was saying, where do I pull the fibs? Well, first, I personally, I'm pulling from that low because that's the local low. I would love to see a higher low here and then continue on its journey. But you got to permit it to come down. And I only pulled from there. It ended up using the entire range. So that's when I would pull from the entire range. All I want to see is that it makes a swing low in here. What is a swing low? It's a series of 3 candles, not 5, just 3. Don't worry about what anybody else tells you, okay? I promise you it's 3. It's just that. That's all it is. So you got your higher low, your lower low, and your higher low. Okay? So you got a lowest low surrounded by a higher low. This candle here, when it confirms this swing low, 3 candle formation by its closure, the probability that you are going to go up and start railroading everybody short is very good. Okay. Now, as long as that low remains intact, that's your swing low. Why is that important? Because your swing lows are your bottoms, you guys. Those people that told you not to catch daggers, they have no idea what they're doing, and they probably are not very profitable. My first mentor, Steve, he told me don't catch falling daggers, and I loved this guy. I respected him so much that for 4 years, 5 years, I did not even consider about catching daggers, and now that's all I do. So, find your own groove. But anyway, that swing low in a swing in price action, and you take it to what? The swing high in price action. If you want to be a swing trader, it's probably really important that you understand this stuff. So let's go find, so that's their swing low. It's the opposite for a swing high. Now, by itself, this means nothing. But if you play a swing low in a discount, counter trading, selling pressure logic, and play a swing high in a premium, counter trading, buying pressure logic, you're going to reverse what you're doing and likely see some profits. Now, I can't promise you profitability because everybody's different, but at the same time, you can do it. I can promise you that you'll have a better understanding than anybody around you of charts and price action, but as far as profits, that's on you. So I'm hunting my double tops. This is my trust me, bro. When I see, look, Bitcoin is going to $1 million. And if you believe that, that means it's going to $113,000. That means that every single double top on the way up there is going to die eventually. And there's going to be a bunch of people that don't understand this and have their stop losses up here. How are you going to get out of your buy long position? You have to sell it. Who are you selling to? The losing buyers above the market. That's handshaking. Isn't it beautiful? It's the most beautiful thing ever. So this little FOMO ride up here, you don't want to chase that. You want to wait for a discount. Now, I will admit, okay, sometimes it won't come down for a discount. It won't. And in that case, I don't have a trade. So if I'm buying sell stops, I try and grab as close to the bottom as I can. This one I grabbed right in here. It was it was annoying, but it was because I grabbed this candle here on its way down. Just giving it a nice stop loss. But anyway, that's the nuts and bolts to what's going on in the markets. This is all the markets do. They don't really move in any other fashion. They make this range and then they run you out. Now, this is going to be in concert with my weekend traders. Weekend traders, this is for you. And I'm going to show you why you're losing your money. Okay, look at Monday, movement. Tuesday, movement. Wednesday, terrible movement. Thursday, London moved. If London moves, don't stay out of New York. Friday, movement. Saturday, what did it do? It did nothing. And there you were panicking, saying that every single down close candle, it was over, the pump's over, we're dumping, we're dying. Ah. And it didn't do squat all weekend, well, all Saturday. I don't open the chart Saturday. I do not look at a single, unless you guys are posting charts and I'm critiquing or helping. I am not in my charts on Saturday. Okay. But based on the logic, simple logic that I teach, there's your high for the weekend, Saturday. And here is your low for the weekend. And we'll call that Saturday. We could even pick Sunday here as well. Okay, so there's your idiot box right there. What did it do? Well, it did that exact same thing that I show you it does. And this is how I was able to determine with a high probability that we were coming up into the buy stops. So Saturdays, we want them to do nothing. If Saturdays do stuff, our entire week profile will be seek and destroy, meaning you're going to have 5 days of Saturday: Monday, Tuesday, Wednesday, Thursday, Friday. There might be some range, but if you see Saturday make a big giant move, your entire week's screwed. Okay. And this goes back into the beginning of framing low probability conditions and not trading them. Way more impressive than a big fat gain and showing where the market's likely to going to go. Can you frame low probability conditions and not trade them? Not likely, not at this point in your career, because you think price moves every day. You are literally in a constant state of FOMO, thinking that price is going to rip without you and you have to be in it. You don't. I just showed you how military grade patient you would need to be to wait for your model and your setup. Some of you guys have watched me wait 3 weeks, 5 weeks before I took a trade. Man, October, I got stopped out. I called the bottom in October and I got stopped out right there, you bugger. November, no, that was the other one right here. I called this bottom, non-farm, Thursday, Friday, it turtle souped me and just took off. And I waited for 3-4 weeks before I took another trade because it wouldn't give me a dip. I will not chase price ever. I will wait very patiently for a dip because just like I showed you with trend, I want to make sure that I'm catching the bottom in an uptrend. I want to catch one of these bottoms here. Okay. And when I miss that, my boat, you miss it sometimes. It happens. Do you read minds, friend? Look, we're all going through the same thing. Okay. The charts, we're all reading the same chart. We're all getting induced with the same emotions. Some of us have the experience to manage them better. That's what I'm teaching you here today, how to manage yourself. That's drawing triangles and finding divvy. That's not hard. If you thought that that was trading, you got a lot of work to do. That's the easy part. And go one step further. Write down in your journal. And if you don't have a journal, let this be your first page. Write down in there, what do I find hard about trading? And what's the easiest parts about trading? And you draw a little tree and you go, okay, this, and this. And I got to work on this. This is what it's going to take to fix this. Well, I know that if I take a loss, I'm likely going to flip my computer table over. So I am going to wait patiently for my model. And when I engage with my trade, I'm not going to have my computer on. I'm going to leave and go do something. You guys are like, what? That's a thing? Oh, yeah, baby. Oh, yeah, that's a big thing in a family-friendly way. Okay? You don't need to be there for your model to play out. You never did. When you go and back test your model, let's say you like the bear flag. Well, here's a stop hunt here. When's your bear flag the most high probability? After a stop hunt. So where's your next bear flag? Right there. Right there. Retested the 200 SMA. I promise it's perfect. And dump. There's your model. There's a model. Can you wait for it? Ugh. Brain's in a little bit of a fog. If I trail off sometimes, my bad. But let's go back to the money printer model here. Okay, so we're going to take this range here to this range here. This is going to be our dealer's range. Okay, it's not important that you are pulling your fibs perfectly. Like sometimes it is, and sometimes, admittingly, okay, sometimes it's totally cherry picked. Okay, totally. I'll use places where you're like, why did you pick that retarded spot? Some of them are order blocks, some of them are just secret little sneaky places the market maker will hide. It's just practice, but I want to tell you it's not important that you're pulling your fibs perfectly. If you want to cherry pick after the fact, and then you can find where you had to pull from to get that beautiful, perfect placement. You see this swing low here with that impulse there? That's where I pull from. I don't pull from where the books tell me because the market maker likely wrote the books and he's hiding right there, that little bugger, right? So that's why I don't pull from the exact low, but it's not important that you're perfect. Okay. What's important is premium and discount. That's what's important. And in concert with trend. Okay. So check this out. We've got this weird looking flag and we know that we're in a discount. So I'm going to take that away and we can even just go like this. Okay. So there's my discount market and I'll be looking for my model. Well, like I told you about that snapshot off the sell stops, this is everything. It doesn't get any more anything than this. Of course you can buy that. I did. I turtle soup I think it was live with the group even. With the leverage masters, I was long on this puppy. I don't remember exactly. Every trade kind of melts into one eventually, but anyway, okay, we were in a downtrend and then look at this swing high right here. So it wanted to start a downtrend, but after it took these stop losses here, like Master Friend, how do you know where the stop losses are? It's just logical. Where does the books tell you to put your stop loss on a bull flag? Right there, right at the swing low. Well, ain't that a peach? Right? So you're not waiting to buy the breakout. You're trying to buy the discount to that bull flag. You're finding the stops and you're going to turtle soup them. Or wait for the money printer. So what is the money printer? It's a shift in market direction, calling out the bottom. And this is how I'm catching daggers. So you see this swing high rate here? Look at how it was violated with this candle here violently with a nice strong close. So there's my, and it just so happened to want to use the whole range there. And there's my money printer model. Very, very simple. It happens in every time frame, on every asset, in every asset class. I don't recommend that you use this in alts because they are supply and demand. A lot of them, there is a lot of buying and selling pressure factored into that. They're not as rigged as Bitcoin because for reasons you wouldn't believe me if I told you, so just take my word for it. But this right here is your trend shift. Now, once you find a swing low in your discount, it's on, baby. It's on. You're going up. You're not going down. That's how swings work. It's a swing low in a discount. Look at that one. Not bothered. High or low in the set. And look at what we did after. Gone. You can use these negatives on your fibs as targets as well. So you don't have to flip your fibs upside down every time you pull them. So if you're pulling from low to high, your extensions go down. And it's likely like 618 extension, blah, blah, blah. No. Equal parts. This is how Sammy's getting his algorithmic measured moves because he takes from wick to wick and then he puts it on there and he'll get a perfect measured move off of his wherever he's putting this. And I would even go right there and bang, right? That's how Sammy's getting his algorithmic targets and why they're just so deadly. He never knew that, but now he does, maybe if he's watching. um, so yeah, look at that beauty. Boop. And now Now that we've done a stop hunt, I want you to find your model. Where's your model? What sings to you in this little bit of price action here? It could be an inverted head and shoulder. It could be a rabbit crab horseshoe bat pattern, a bull flag, ascending triangle. Whatever that is for you, it's there. It's there. You just had to always, you just always, it was the most simplest thing you could have done. Just flip your brain around. Remember when this one dumped here and the entire Twitter was suicidal? All right. And I mean, it hurt less the second time here, but this was like $1.9 trillion in liquidations here. It was grotesque. This one, not so much. Because what do people do? Well, when price is breaking out, like so, or here, they'll move their stop losses up, right? So if they were long here and it started breaking out, they'll move their stops up. Excuse me. And then it'll rip. And then they'll be like, oh, okay, well, I'll chase. Look at that. Look at that. Look at this. This right here is exactly like what we just did. There's that freaking bull flag that just wiped into the discount. But yeah, so once you shift trend off of stop losses, you're not waiting. As you're waiting, you're not FOMOing. You're waiting for the next discount retracement. This is going to be really hard for you. If you've got ADHD, if you've got like some sort of something going on, but just for an entry was 32 days. From stop hunt to proper entry was 32 days. That's over a month. Could you imagine not trading for a month? Some of you guys are laughing right now. And I'm laughing with you, not at you, because we're laughing together. Okay, but that's 30 days you had to wait for that sucker. Now imagine taking a bunch of high frequency scalps in this garbage, getting chopped to death, chasing that breakout, it dumping in your face, right? Now it's finally dumping, SR flip here, trust me, bro, and then it rips back in your face. This is what happened the last 2 weeks with you guys hanging out with me in the Discord. You let every single fluctuation in price punk you hard and convince you it was going to go one way or the other. And the one of the boats you're missing is premium and discount. It's really, really simple. And trend, of course. Now, this is in the daily time frame. And look at how long it took for my money printer model to play out and hit targets. So from entry to that top there, 100 days. That's how long you had to hold for that. Remember when I said you can trade 99% less and make 1,000x more? Probably even more than that. I mean it. Like you can literally not have to trade your face off every day. And for my working class heroes, I got a couple of treats for you too later on. Okay, so let's dig into some intraday price. Oh, there we go. And see what's going on here. Now, because I run time-based charts, my charts are set with New York. The markets run on EST, so I do as well. My true day open is midnight, unless I say candle open, daily candle open. I'm talking about midnight specifically, but typically it's midnight EST. That's my daily open. That's my weekly open. And it just gives me a little bit more of an edge on what I'm doing for time-based charts. So if you want to, sync yourself to what we're doing here, that's how it's done. Now, this one was totally cool, and shout out to my hardcore traders that spotted this puppy. Like, this is beautiful. I still want to see it slap silly, but it's still beautiful how you could, let's just say we did pump today and we went for my monthly open targets up here to be offside and still profitable is next level. It's game changing. But let's just follow the rules here. Okay, so it's seven. This is my daily plan for the money printer model. This is my gift for all of you guys. It goes hand in hand with Sam's Banana Curve 200, his 200 SMA play. It's like if you can understand risk management and use it properly, it's like literally trading for dummies. Like you know how you back in the day need to go to the library and get like changing your transmission oil for dummies handbook, or you know that book. This is basically that. And I don't know if transmissions have oil. It's probably some kind of fluid, but there's the beauty right there. So what are you looking for? Well, you're looking to railroad all the suckers. That's what you're looking for. So once we hit my targets, and if you remember me saying, and if you don't, just take my word for it, that we could dump hard from here, and we still can. Okay. Um, Once a giant pool of liquidity has been raided, typically it freaks out in that direction or reverses real bad. So let's just investigate what went on here. So, first thing to any one of my setups is a stop hunt. That's it. That's all there is to it. It's a stop hunt. How do you know it's a stop hunt? It's literally just logic. After 7 a.m., if price has moved, it's likely stopping people out. Remember, this is all price does. This isn't buying pressure. You can't buy if nobody's selling. So who's in control? Nobody. It's a net sum zero game. Wink, wink. So once you come up into here and you take buy side liquidity, you're looking for a shift in market structure, a very convincing stab down that would make you want to FOMO short. That's this move here. I would consider this as well too, but it went for one more. Now that it's reversing and it hits what? A premium retracement in the form of a 786. Now you have a short entry. And where are you taking it? To liquidity. Well, where's liquidity? Well, let's figure it out. Where, just based on the logic that I'm teaching you now, where is it logically that everybody has their stops? Because you're not a buying pressure, retail minded trader anymore, you're going to be looking to counter trade these suckers. So everybody chasing this bull flag, where's their stops? Now, admittingly, I was hoping it would continue too, but we're just simply following the model. There's everybody's stops. Now let's pull from midnight low here to this high here. Come on, little buddy. Good enough. It's supposed to go a little higher. Let me get it. I want to see it hit perfect. There we go. Boop. Oh, does that line up with yesterday's open? Sure does. Totally random, by the way. There you go. So there's your higher low in the set for a possible moonshot for the continuing uptrend and this reversal model here. Wild, right? I know. I know. You could be offside and still be profitable. Yeah, you can also lose over half your trades and still be profitable too. You probably heard that before and you were like, oh, man, I don't have to be a genius. You're like, man, I'm not a genius. I qualify. I can qualify to be a trader. This is easy. It's hard, isn't it? It's freaking hard trying to counter trade yourself and instincts. It legit is. As soon as somebody steals your shoes, you're like, give me my freaking shoes back. That's basically what goes on. It's like it takes your money and you're like, give me my money back. And right away it's boom, 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 and then you're smelly. So this model here, my money printer model, repeats bullishly and bearishly every day. Why? Because the markets are rigged. Okay, your little idiot box right here, it swiped the low, it shifted structure, discount retracement to a 786. And trust me, bro. Wham. Ain't that beauty? It's way easier to see bullish. So if you ever have to press Option I or Alt I on your keyboard, do it. So that is that. Now, I will go over a couple of examples for you guys, okay? I will go over this shoddy example here. I mean, I traded it, but it's look at it. It just looks like poo, doesn't it? It doesn't look like that deadly one that we had today. But if you take this local low here, not the lowest low where the books tell you, forget those guys. Okay. The books are lame. Stop hunt. That shot up, breaking market structure, discount retracement. Again, look at, I'm not cherry picking. I could pull from the order block in that gap if I wanted to, and it could be perfect because that's where the market maker head this time. Okay. But for the sake of not being perfect, because nobody is, and it's going to be really hard for you to do this live for the first while, hindsight. Hindsight, it's fine. Swing low in a what? Discount. Here's your discount market. Why am I not pulling from the wicks? Because I don't do what people tell me to do. I do what the markets tell me to do. And the markets tell me to pull from the wicks because look, let's say that the bodies, excuse me. Let's say that I did pull from there. Well, now my limit order, if I had something to do, is getting a fill. Can I leave a wider stop? Yeah. Do I have to be perfect? No, I don't. I could pull from here and still buy that discount market with the swing low and my money printer model materializing right in here. That's right. I'm going to tell you this, okay? And you're not going to believe me. Go and back test. The money printer model is the bottom. It's the bottom and top. All of them. Every single one. Okay? Some of them are ugly. Some of them are real nice. Some don't give an entry technique. It's the bottom. Okay? So once you take liquidity, you're looking for that shift in structure. I would accept these two as well. Swing highs here, violently taken by price, showing a trend shift. I'm buying the next discount. I was already in on, here on that week, turtle soup, but my entry was the gap. Hilarious. And there you go. And what time did that happen at? Well, there's 7-ish and there's 11-ish. And sometimes, sure, you got to move this to 12. There's some threshold in there. Sometimes you got to move this at 6 a.m. All you're really looking for is the draw on liquidity, right? You're looking for the big giant stop hunt. Well, there's the idiot box there. You've identified it. Very easy to identify. Probably chopped you up. Then it takes one side. Everybody's like, oh my gosh, look it, trust me, bro, selling pressure. And then it takes structure here. That's a shift. That's a break. And that's your discount retracement. Then you have these buggers here. Sunday, no trade. Saturday, no trade. Buy. Don't be in the markets. Don't do anything. Okay. You have no business being trading in unfavorable price action. And I mean, just go and enjoy your life. I would rather see the Discord quiet on Saturday than, I mean, I live there. So if you're back testing and stuff like that, by all means, go ahead. But like, don't be putting your money into the markets on the weekends. You may as well just give it to me. I'll take it. I know my buddy here, Caesar's iPhone. He'd like the $300 here thrown away every weekend. Crypto Plumber, Crypto Fish, Dog Mom, Dominic, Ed, Hey You, Jake Jones definitely needs $20. Justin, Caspa Pamp could use $20. Curly Fode, she's like, I'll take $20 twice, please. Just hook up your friends if you're gonna give away money, or just go to your demo. So this is really annoying. Okay, this is where I would just consider no trade. Why? Because price needs to show me a willingness to want to do something by like 10:15. Okay. By 11, if I don't see my model, I'm not interested. Now, master friend, you said it does it every day. Yes, it does. Okay. The money printer was here. It wasn't in New York session, it was in London. Okay. You take up, take everybody's liquidity, shift structure, premium retracement, double top here, sell short, another little baby money printer in the overall money printer, dead. Okay. And then the money printer being the bottom of the day. Thursday, again, this is for your notes. Between 1 and 5 a.m., if you get a big solid move like that, New York is going to do this to you. This is how you can frame yourself game changing, low probability conditions and sit there and laugh while everybody just begging for price to move. It's not gonna. Wednesday, no draw on liquidity, so no trade. This should be for your journal. The first condition to any setup is a draw on liquidity. You want to get into those stop losses. That's all price is doing. Whether you want to realize it or not, that's all it's doing. Okay. Oh, and then of course, let's expand everything going on in here so I can show you that it's still replaying. And look at how ugly those candlesticks. You want to frame yourself low probability conditions. Look at how come into the index and you see liquidity gaps in these candles. Don't trade. But anyway, stop hunt, break your market structure. Where are you looking for a discount retracement at or below opening price? Bang. One, two, three opportunities, money printer here inside the overall money printer, and there's price still doing its thing at the time I told you it's going to do it, but it's not working in a wide range. This is also for your notes. Large range days bring tight range days. Tight range days bring large range days. All right, so let's check out this beauty here. So we've got an obvious idiot box. Now, this one is super duper tricky. I call it my type 2. There is no draw on liquidity. You'd have to already understand that the draw on liquidity was the previous day. Excuse me, just 1 second. You got to understand where you are in the environment. Yesterday was already the shift in structure. So, what would you assume that Tuesday would do on a tight range day? It set it up for an inverted head and shoulders, cup and handle, ascending finger triangles, no bats, but you did the stop hunt, you shifted structure. Now, why did it blast here instead of just freak out here? I'm going to tell you, and you're not going to believe me. Time, 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 time. Okay. The charts run on time. If they didn't, this wouldn't be down here. You wouldn't have an open, high, low, and close at the same time every day in every time frame. Okay. Time plays a major factor. And lots of people just don't, they ignore it and it's funny, but whatever. So there's your cup, there's your handle. Now, remember when I jokingly said, imagine being able to time a handle on a cup and handle? I wasn't joking. That cup and handle blasted right when it was supposed to. Wild, right? Now, if you zoom in here and you understand the overall structure and you're not too concerned about time. You're just looking at the overall structure of this. So you got to find these sneaky little bugger swing lows, the local ones. Look at that one right there. So I'm going to zoom in here and get the bodies on that one right there. Yeah. See what I mean, guys? Isn't that a inverted or isn't that head and shoulders supposed to dump price down? Not in a discount. And yeah, a couple opportunities to buy that discount in this price. Now you're blending time and you're going, okay, well, we got no movement for London. New York's likely going to be what? Awesome. And what was it? Super awesome. And where did price run? Right when I tell you it's going to rush hour, 7 to 11 a.m. EST every day. You've got a awesome probability of catching a sustained price run for you to capitalize on almost every day. You're not going to get that every day, but you'll get something. You get at least 2 of these a week, and that should be enough to change your entire course of your family tree history. 7 to 11 a.m. EST is rush hour. Okay. Outside of these times, you're losing your money. And I know you don't want to hear that. Some of you guys, I work, I work really hard jobs. I do a lot. Look, I did too. Okay. I was a foreman for a commercial construction company. I ran my own company for a long time. and I still made it. And that means you can. I got nurses that I've trained that have fired their bosses, police officers, micro celebrities, lots of people with busy lives still change their lives with it. So that means that you can too. So that is my money printer model. And it's literally, I know it looks like hocus pocus at the moment. And like, it's hard for me to convey this stuff to you without seeming like an egotistical D-bag, like for real. Because like, I don't know where price is going at any given moment of the day. But when my thing shows up, I know exactly where price is going. That's the thing. It's like I will sit and wait until it shows its hand to me, and then it becomes obvious. A lot of the times, like, it just hasn't been too obvious. And I'll admit that. Like, I'm not trying to outshine anybody. I'm legit just trying to help. Um, so that being said, you've all got a wonderful opportunity to do something great with your lives. For some reason, you found Sammy and you gravitated toward his energy, and you're here, and we both really deeply care about you guys. And I mean, I hang out with Sammy all the time backstage. I honestly, like, I've been in every Discord, all of them, ones that you wouldn't even think were existed. There's nothing like it. Like, you actually have people who care about your success here. And we love you a lot, and we hang out a lot, and it's just like he breathes for this group. And plus one shout out to Zeno. You wouldn't believe how much of his DNA has gone into this trading group. It's pretty, he runs this show. So, yeah. Um, as far as targets and stuff like that to look forward to for January, I would just like to see pretty much the same as Sam. I mean, I do see a bunch of liquidity down here. I don't know what Bookmap's saying, but there's some equal lows down here. And oh boy, do I invite this. I would rather it dump in here so that I could get an awesome risk reward to 113K. That's my next stop. So if it dumps down, I would be so happy. And then I catch that money printer. And the harder it dumps, the more my R multiple is going to be. Well, Master Friend, how do you know that it's coming to 113K? Because it's going to a million. That's why. If it's going to go to $1 million, that means it's going to come to 113K. It's just logic. It has to reach there. It's just like, when is it going to reach there? So I'm just going to keep looking for my little buddy. And every single dip that happens with, you'll see divergence. You'll see it all. It ain't going to slip you by, especially Sam. He'll know exactly when it's good to go. So don't stress on it. And just like today, how that flag came crashing down, or last night, this could happen. It's not that it has to, it's that it could. So you anticipate it could happen, and you would permit it to. And this is why you put up your risk for your trade. Now, let's go over risk management really quick. Oh my goodness, this is like one of the biggest boats that everybody's missing is proper risk management. And I've already got a giant lecture in my free mentorship playlist on YouTube, but just for a recap, you want to risk 1 to 2% maximum per trade. Okay. Don't worry about what Sam is doing on his live. The guy's a millionaire when he's risking $600 on, just a few $1,000 account. That's not his 1% is he's a multi-millionaire. He can just add money to the account. You know what I mean? But for like people who don't have a lot of money, like couple grand, five maybe, you're risking 1 to 2% of your equity total maximum per trade. And if you do this, you will fly by everyone around you. Okay. There's a certain formula for this. Now, if you're using a crypto exchange, You're using your risk. So let's just say your risk is $50. Okay. And then you multiply that by 100. Why? Because you're risking 100% of your risk. So that's the best way I can describe it. So risk times 100 divided by your stop loss. If your stop loss is 2%, you don't put the percent in the formula. You just go 2. And that's how much you're using for your position size. So that's not your margin. That's your position size. Okay. So for example, when I'm telling you guys to use $1 in your trade, well, yeah, you're using $1. But if you're multiplying that by 200x leverage, you're actually using $200 in the trade. That's how much you're actually using. So even if you went to 0x leverage, right, you're still going to have $200 in the trade. I know I just melted some of you guys. It's okay. Just think about it. I'm going to borrow $199 from MEX. So I'm going to use 200x leverage, right? I only want to use $1 of my own money. But then there's people who are like, I don't need MEX. I can just use $200 of my own money. See how that's the same? So let's say that your position size would equal, let's say, 5 grand. Oops. It equals $5,000. Well, how much do you want to borrow and put up for that trade? Do you have an account of $5,000? No, you only have an account of $2,000. But your stop loss is so tight that you need $5,000. And this is where leverage comes in. Okay, so please go to the risk management section of my YouTube there and go watch that video because you will change the game for yourself. Not only will you be positioning yourself correctly, you're going to take the sketch away. You're not going to care if your TA works out or not because it's not a lot of money, right? 1%, ooh. If you risk 1% per trade, you have 100 losses in a row till you blow it. Well, who's losing 100 trades in a row? Probably not even the worst beginner, right? If you're risking half of your total equity, you got 2 trades till you blow it. So when you're got your reward of 3 per one risk, so in other words, you're risking $1 to earn $3, how many trades would it take for you to double your account? Depending on how many losses, but maybe like 60. Can you handle 60 trades in a year? Some of you take 60 trades in a day. But yeah, you could definitely change the game for yourself on that one. Risk management. Um, yeah, other than 113K for this week, I don't have anything else for you. If we dip and we lose this bottom here, sure. So in the 99, I was going over this guy, this 4-hour swing low, and front running the idea that today we could create a swing low. So you got your higher low, lower low. If we keep this candle a bullish engulfing and we close these 3 candle formations as a swing low after this stop hunt, our chances of flipping out to the upside are really, really, really good. As long as that remains intact this week. So we'll see what New Year's shenanigans brings. And that's about it, you guys. And I'll go over your... Wow, that's a lot of messages. Hi, everybody. We had 130 people in here at one point. Awesome, you guys. So glad you guys are here for this. Oh, and I see Sammy showed up. What's up, brother? Happy New Year's, indeed. We need more recipes. You only need one. Out of the thousands of things that there could be, you just need the one. 99 ways to cook a steak. What's up, Jamie Allen? I'm here for the Asmir. You're funny. You're very welcome. Yeah, I can vouch for that. I wish I had started in 23. I know, right? Yeah. Oh, no, no, no. I'm pretty sure we got the upgrades here. I learned my lesson last time. Just make sure I actually showed the screen this whole time. Where can you demo trade the NASDAQ? Right on TradingView. Right here. Go to trading panel, paper trader, boop, connect. Give yourself a realistic account for yourself. All right. This was a demo for a lifer. Oh, look at this. I still have a trade going. It's up. um, yeah, give yourself, holy shnikey. Give yourself something realistic for you and for your 1% risk, stuff like that. You can also do this with um, Bitcoin and crypto. Demo was the best advice you ever gave me. Learned so much this year. B Stan, I love you, man. You're going places. All of you guys that demo trade and hop into your demo accounts or start using just ridiculously small amounts of money, you guys all end up becoming happy and sticking around and really enjoying yourselves. And then that leads to you settling into something great, which is awesome. Oh, you like that pen, eh? Nice. Shout out to the Fat Max. What's up, Twiz? Crypto Capto, Crypto Savvy for still finding a way to become globally famous in crypto. Ah, plus one. ah, you're funny. Yeah. It looks so easy. Been trying to see this live, missing it all the time. Look, a lot of the reasons why you're missing the boat is because you got live money behind the trade. Like you actually have something really tangible to study, like a science, like a repeating phenomenon that is like the sun rising every day at the same, almost the same time. You know, it's crazy, man. Just keep going. Eventually, you're gonna see it. Eventually. What time zone? EST, always. Everything runs in EST. Will this be posted? Yes, I will post this to my free playlist for you guys. What time frame? You can do this in any time frame. It all depends on what kind of trader you want to be. So when I was going over the daily money printer down here, if you're a swing trader, you would have had to hold this puppy for 100 days to that offered high there. 101 days, right? So if you're playing it in a daily time frame, you're going to need to wait a long time. If you're playing it intraday, you're look, I run time-based charts. So if I'm holding for the weekly range, I just wait for Sam to yell weekly candle close, and then I close my trade there, 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 there. Wherever he says close, that's where I close my trade. And whatever the week offers me from my bottom catch, that's just what I collect. It's the same within the daily time frame. Daily candle close, if you were to catch the bottom here, like we did last night, boop, right? And you just hold till the daily closes. You run a time stop. Sure, you didn't capitalize on everything. I mean, I did take a piece up here, but sure, you wouldn't have capitalized on every little thing, but you just take it what the market has to offer you, because these days where you hold for the whole day, and if you're 200x, lots of you guys aren't 200x, but that's still 4% on the day like that, and that's offered just to the close. And it doesn't matter what happens in between then and there. Who cares? Just take what the day has to offer you. You know, if you were to catch the bottom here, it's like between 4 and 7 p.m. Just that little retracement back up into there is a nice little day scalp. But it really depends on the day, the week of the month of the year. There's a lot of factors into that. Demo with larger time frames, stay out of the 1 minute. I disagree. I Because price is fractal and there's nothing going on in the 1 minute that isn't going on in the monthly, which I showed you at the beginning. You can get a savage degree of experience trading the 1 minute chart and using the 15 minute or the 4 hour as your direction bias. And then you trade the 1 minute chart. You can find all sorts of little patterns in here, right? In between the times, in between rush hour here. You just find all sorts of beauty. Bear flag, bear flag, after the stop hunt. Just money printer here. Great. High frequency learning, right? Whereas the higher time frames, it would look, if you were to try to take a money printer and you were to study that, it would take you 100 days to learn that money printer, the daily time frame, than to just play it in the 1 minute every few hours, every 4 hour cycle. Oh, I said too much. There's something for you to mind there. I played that bear flag. Nice, attaboy. It's not talking bad about someone if it's accurate and factual. uh, you're funny, bro. I've had a bias this week that we would go lower. I haven't taken any trades because of the bias, and I missed out on so many good opportunities. Sometimes when I take the time off, I have to go back to demo to get that confidence back. Me too. Me too, man. Oh, there was this one Friday, and it just kicked the crap out of me real bad. And it was all because it just wouldn't run. That's 24. This Friday up here somewhere, it just beat the snot out of me right there. It just wouldn't freaking run. And I could see that the draw on liquidity was below the market, but it just wouldn't go. And then finally the next day, bam. Um, it happens, man. Sometimes when you just I get so angry because I'm a really emotional person. Like, I don't know why, just am. So when I get really angry and even if I like sleep the next day, the gym don't help, sitting in front of my computer, still upset. I just go, I don't even demo, man. I just study. I just put lines on the chart and be like, you go there now. And then it will or won't. And it really helps with the confidence. Absolutely, man. Just taking a break. It's like, when you eat spaghetti the next day and it tastes a million times better? It's because all the flavors marry. And it's just like, it was like, yeah, that's spaghetti. That's like your brain. Just let everything that you've been learning settle in and marry and marinate in there. And then now, yeah, Teflon gloves, catching daggers all day. I still have on my fingers. No weekend trading. +1 JSOL. And Sundays you can use discernment because sometimes you will get a lot of volatility on Sundays. I'll go back to Bitcoin here. You can get a lot of awesome movement on Sundays. Just use it's first. The first thing is a stop hunt. As soon as you take a pool of liquidity, look for divvy, look for your reversal, and you're good to go. Like 90% of the time. It's awesome. Seek and destroy. That's Saturday. All day. I'll teach you guys how to trade Saturday. As soon as you feel like trading a bullish breakout, hit short and watch your win rate skyrocket. But do it in demo. Don't do it with real money. Now we get to the tough stuff. When you got stopped out in October, did it, dude, man, that trade in October was the money printer. There was like a double money printer in here, bro. It was so annoying. October, this guy right here. Oh my goodness. That one. So again, nobody's perfect. Okay. When you guys are doing this, you're going to screw it up at first. At some point, it's going to not look right to you. Maybe you use the bodies. Maybe you use non-farm as your deadly bottom call like it usually is. But then sometimes it'll bink you. You made the swing low. We were in the daily. I was up 15R. And then it came and it got me and went grab turtle soup here. Look at look at that snapshot off the sell stops. And I'm like sitting there, okay, good little boy. I'll just wait for the next discount. No, 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 gone. Boom, $108,000 Bitcoin. Painful. But good lesson learned there. Give yourself some wiggle room. You got to allow for some coloring outside of the lines in crypto. It's kind of rude. And those of you really interested in order block theory, I don't even use it in crypto. Okay. It's not to be used here. When you get stopped, yeah, journaling is so necessary. Yeah. It's like you're having, you sit there with your buddy and you have a conversation, and you're shooting it back and forth. And the next thing you know, you guys come up with this great idea. And you're like, what just happened? We just thought of that together. That's you and your journal. You're having a conversation with yourself, your past self. Man, we bought on that weekly screen share. Nice. Attaboy. I had to miss that one. Nice. Let's go check it out. Yeah, that was what was that? Oh yeah, yeah, yeah. Where was that? Friday, Thursday. Oh, you'll have to remind me. Oh, I think I remember now. You were talking about a previous one. Yeah, absolutely, dude. Can you show the money printer playing out on a 5 minute with 15-minute entry, 7 day, 7 to 11? Yeah, you gotta flop around time frames, bro. Like it wasn't too obvious here in the 15 minute because there's just a lot of garbly. It was really, lethargic in here. But when you drop time frames, it starts to make a little bit more sense. Candles are a little bit more thicker. You can see you've clearly shifted direction. Now, I was not anticipating that. I was really banking on that one, but it wanted to be rude. So, but that right there, how this candle here just slaps this swing low, like it's like, yeah. And then everybody's got chasing that, all the emotional new traders. But you guys, you're gonna wait for that, and you're gonna sell short in that up close if you're short. I don't recommend shorting a bull run. Ooh, look at you, Marcus. I started trading when the last bull run starts. I have lots of fear in the body within long red candles. Word up. Which look, we traded that dip during the weekly screen share. We got talk about that. Look, it was Thursday night. Here, hold on a sec. Oh yeah, I'm pretty sure you're talking about back here. No? Or just last Thursday. Well, here, bro, I'm just gonna let you talk. Ask to unmute. Join us, Mr. Sammy. That name again is Mr. Price. I am buying that though. The whale scalp that who sold those local tops. You're awesome, bro. Saved me from this trade literally a few minutes ago. Nice. 3 out of 10 to be profitable. Yes. Yes. Most can take 7 losses. The magic is you have to follow a model. If you're just chasing price, risk management ain't doing nothing. You have to have a model, in your trading plan to deploy. Give me my shoes, damn it. You got them. Do I need to do it again? 52 more messages to catch up. As a friend, where does the liquidity money goes? Well, Curly, if 90% of people are losing, guess who's winning on a net sum zero game? The 10% of people who are taking our money and they have no face and they have no name. Just like my dad. Just kidding. What do you mean, head? What dump? Friend, you see the patterns? Can you see the patterns now? Oh no, Sammy, I get what I know, dude, man. See, I let you do what you do with patterns. And like for example, watch this. All right, this dip here, right, where I turtle soup lunged. I ain't looking for patterns. I'm not considering them. But those who are can use everything that you do. Okay? And then you've got your shoulder, weird head, right shoulder here, 200 SMA above. You've got tight coiling moving averages. You've got divvy. Where was it? I seen it earlier. I seen some divvy in one time frame. RSI underneath, stochastics curling up. This has the life revision written all over it. But like, when I see that on people's charts, I'm like, yo, you know, this is what you need to be studying when when I'm putting a line on the chart and I'm expecting it to go somewhere, it's like you're gonna have to study all these things that you love that Sammy does inside of just, because it's so gimpy. I'm not even gonna try and say this is perfect, but there's the cup and there's the gimpy 786 handle. I know it's really gimpy, but there it is. All right. Yeah, 100% only trade the model. Any recording, please. It'll be free on my YouTube for you guys. You're not trying to outshine anyone. You're the man. You could have held it yourself. You choose to hide this perfection. Yeah. Behind a tiny little paywall has to be. I'm an exclusive snob, man. I'm here for you guys. So anybody that's here gets to hang out. I've gotten pretty close, so don't say it's not possible. What's up, Fit? You're very welcome, Chris's iPad. Yo, Sammy, I let you unmute several times. I don't know. I'm pretty much done here if you want to say your piece and hang out, bro. How do you even pull up a NASDAQ chart? NQ1. What's your take on risk management if you just DCA and hold for the end of the cycle? Oh my goodness, that's a whole other ball of wax. I'll tell you right now, you're not going to make more money ever doing anything else in the markets than doing what you just said right there. You put away your chunk, you have a 5 year, 10 year, 8 year, whatever plan, and you just keep stacking until Sam says bearish divergence on the weekly in 2025 or any 4 year, you know what I mean? Any 4 year cycle after that. You want to make real stupid walking around money? That's how it's done, buddy. I learned that firsthand. You can do good with risk management if you've got your and you could compound your gains, sure. But I mean, the amount of people that are actually doing that versus how many people are walking away with their tail tucked is not very good odds. You want to make really good money, just stack, and whatever. I'd be saying this even if you weren't here, but I'm not a crypto guy, man. I just follow Sam's lead. I like Hex. I'm a Richard Hart Maxi when it comes to inventions and stuff like that. Um, as far as like crypto and block coins and bit chains go, I have no idea, dude. I still don't know what a block is, but just keep DCing into lots of the stuff that Sam puts out because eventually everything's gonna freak out. Is there a monthly close? Of course there is. Sam would never miss that. You're very welcome. Happy New Year. Yeah, Jason, what's up? Aries fire, brother. Amen. I don't know that people need to hear it or going to hear, but here it goes. I curse Master Friend under my own breath. What a dumb idiot telling me I can't trade real funds. But then I trusted the process and did not have funds behind movements of the market. I was able to see my errors and learn not to make them. Messing up your trades is like getting bit by a dog. After you get bit, you can see your model and not take it or even play it wrong because you can't think clearly. Amen, bro. I can't believe you were cursing me. Bless you, bro. And you know what? It's funny because when you first get a couple of students and they're not bad apples, but excuse me, 1 second. I'm sick still. Not bad apples, but like when you get your little troublemaker students and you'd be like, yeah, that guy ain't gonna make it far. Wild Deuces, you blew me out of the water when you went back to demo and you were like, yeah, no, I am doing this. I was floored, bro, and I'm so happy for you, man. JSOL YouTube, you little demo baller. About Divi, how do I mark out wick or body? So if you're playing the shark fin, bro, I would use the bodies. And if you're marking out divergence, yeah, you're using the bodies, bro. I mean, that's class C. It's I wouldn't consider it weaker. I would just consider it another kind. I want to find you a good example though. So you see this puppy here. So right where you start the divvy, that line there. So you got a swing down in price here and a swing up in RSI here. You put a line on the body that starts the divergence. And once you crack a candle above there, just long. You can wait for the retest. You can find your model. I mean, that was our little cup and handle there, but that's the shark fin. If you are using divergence, use the bodies and use the RSI, everybody. I see a lot of the beginners using the stochastic. It could bang, but you got higher probability in the RSI for your divergence. And it might not be the bottom, but it's definitely 98% of the time a bottom. I hope that helped you, buddy. I bought that first swing low today, then got rock thinking it was liquidity. Oh, it's okay. See, you got your wrist dialed in, so I'm not worried about you. Sammy Cup and Andy all day. You guys, it's funny. I was into Wyckoff, Elliott Wave, Fib Circles, freaking. I was trying to find confluence in everything when I first showed up to the 99. And Mr. Smurfington said, "Yo, you're all over the map. Just find that one thing." And I was like, "Okay." And I just went with the cup and handle. Lo and behold, it's the bottom and the tops. So crazy. How do you change the balance on your paper trading? Start a new one, bro. Or I think it's just click around. You will find it. Oh, there you go. Sam Eaton's got you. +1, bro. Thank you. Fit. That's why the price normally reverses in the liquidity. Yes, ma'am. Yes. And if you just be way more patient than ever. I mean, it's so funny. Dog walkers and babysitters, they all think that they got patience until they get into the market. For those that hear Master Friend say he does turtle soup, this is not to be attempted in live funds. Learn, yeah. Yeah, you definitely want to learn these in a demo. Master Friend, how is life in the great state of Canada? It'll be a lot better when Trump invades us and takes over. No, it's beautiful here, bro. I live on the west. I don't even know. It's not even Canada over here. It's like its own country. Like on the mainland, it's a mess and a bunch of Chinese products, and over here, it's like really dope and lots of military. I love it here. What's up, Uric? The bad apple here. When my mind is good, I love to combine Divi 786, fair value gap, money printer. Yes, moving with the 21 to 200. That is when you do 7 to 11 a.m. Everything that Sam and I teach you is going to be turbocharged in that time span, and there's nothing like it. And again, sometimes it just won't move, and you gotta run damage control those days. Yeah, fib circles for the win. It's hilarious. I had fib circles, set the lifer sauce. I had all sorts of stuff on my chart just to right click and press remove indicators. And now all I play is the Sammy Cup and Handy. It just makes me money. So let's play devil's advocate here for a moment and say that this is the bottom. That is where my stop loss is for my trades. Oh, I only have one open now, but that's where my stop is. I'm not moving it. I will permit price to come down and be an absolute butt face if it wants, even if it wants to come within 10 cents of that low. I still want to see 113, but we're running out of time. We're on a 2 p.m. liquidity run here. It needs to flip out. And if it doesn't, this will be the first ever monthly bearish candle ever 1 year after the halving in December. This will be the first one ever in history. So and because this week overlaps with the monthly close, typically there's some weirdness in here. And Sammy, get this one. Non-farm Friday, usually the first week of the month, right? Not this time. I don't even know how to deal with that. I'll be studying it and journaling it because first week of the month, every month, even if the first week of the month lands on a Friday, we have non-farm payroll Friday, non-farm employment change Wednesday. This is the weirdest week ever. Non-farm payroll ain't till next Friday. So I'm bugging out. I don't know how to treat that. But anyway, that's my this is what I'm aiming for by 7 p.m. tonight. I want to see us back up above the at least the candles open. We're only a couple grand from it. It's won't be too hard if it really wanted to. But just trippy stuff. We got ketchup chips. We got double ketchup. Give us Trump, baby. Please, please, for the love of God, make it so. Master friend acts more American than I do. You're awesome. Well, thank you all for joining. I hope I rattled some of your cages and really set things into motion for you as far as expectations of yourself. Oh, and Sam. Okay. Do not use Sam and I as signals. You will get your butts whooped constantly. And the reason is because you don't know what you're doing. Sam and I can give you the most military grade, perfect trades, no drawdown, entries, targets all hit flawlessly, and you will still mess it up. And it's just a lack of experience. Now, Zeno said it the best. Eventually, we can become signals, but you just got to hang out and get used to the ebb and flow of what we're doing. And then you'll be able, don't come into the group thinking you're just going to use this as signals and be profitable. We all tried that. It don't work. All right. So just study this little thing. Go into your charts with your vertical lines. Go and study a model for you. And I have my trading plan already in the Leverage Masters for you guys, but I will give it to the whole group here. And it's very simple. There's not a lot to it. I'm literally just hunting one thing. I will be looking for the one shot, one kill, which is the weekly range every week. I'm not going to change it. There's 52 weeks in the year. So that means I got at least 52 trades in Bitcoin this year. I'm only doing one shot, one kill. And I'm not going to do anything else. Now, here's a day trading plan for you guys. And I'm putting this in the Crypto Lifer Discord. 99 chat. So one is for the swing trade. The second one's for the swing trade, and the first one is for the day trading plan. Very simple. Can fit on the back of a business card. Doesn't need to be 115 pages. And you just, I'm telling you, and you're not going to believe me, and I'm promising you right now, if you stick to a model and a risk reward system, it is impossible for you to be a losing trader. Literally impossible. God bless you guys. Thank you all for joining, and we will see you in the Discord. You're very welcome. Happy New Year. Thank you guys. God bless you all. Peace out.